Miraculously, we've made it to yet another Friday. Mr. Pat, welcome to the Mick Report. We have Pat McMasters. Pat, what's the rate McMasters? How are you? Looks like you froze.
Yes, I am here. Going good. How are you doing? Yeah, no, I was just actually, I think for some I lost you for a second there.
You drifted off for just a moment. Mr. Keenan is here. Afternoon. Good afternoon. Interesting week, to say the least. We saw rates kind of go up. What'd we go about eighth of a point?
Yeah, eighth. It just, they're kind of mulling around right now. I mean, they've been stuck in this range, we'll obviously touch on that, but I think everything's waiting for next week, obviously. So
Tyler's teasing us with his
muchachos. Yeah.
Sí, señor. ¿Dónde están los baños? So let's get right to it. I'm taking a look here at the Cromford Market Index, and it's showing us that I got to change something out here for a second. That's not what I wanted to change. Bear with me. There we are. It's showing us that everything is improving again, kind of at a faster rate, but I think with the rate hikes that we had this week, that's probably going to slow down just a hair, but I'm going to show you something on the 7-day moving average too. But it says here, things got even more positive when we look strictly at the new home market. Pricing has remained stronger than the resale market, and builders are having little trouble selling all the homes they can complete. Gross margins are strong and leave room for incentives to close the deal. So those rumors of new construction dying and foreclosures and all that stuff coming along are just not here. But check this out. If you look at the 7-day moving average, we're at 3,500 homes, and we almost touched right at the inventory. So you can see with the ticker below, we're only off by 52 homes. So, it's going, this is probably just a normal bump in the spring, but it looks pretty big on the chart there, but it's only 300 homes. So I didn't hear one person call this housing bull run. No, it's kind of taking everybody by surprise. And this is the market index here. You can see this is supply, right? Or not supply, this is demand going up. Supply is dipping down, and that's why it's showing the there's demand. Demand is going up, supply is going down. So that makes the total market go up on the Cromford Market Index. So Sean's asking, Rick, when pulling comps, does the bank take into consideration the seller's concession to establish a price? The bank, you mean as far as an appraisal?
Yeah, they'll actually, in the appraisal, they'll say, there's a note saying, the seller is giving X amount of concessions on this deal. 10, it's actually noted in the appraisal report.
Yeah. Does it affect the value?
That's probably more of an appraiser question than I can't give you an honest answer, to be honest with you.
Yeah.
Because obviously that's an appraisal. I mean, they make it noted. They note it in the appraisal report. The seller, buyer is getting X amount of dollars in seller concessions.
Sure.
So,
well, this is national inventory here, Pat, and since we both have red pens now, I thought I'd go ahead and use mine first. But this is national, so look where we're at. We're going all the way back to 1999 in existing home inventory. Does it look like we have a shortage? It's pretty wild, isn't it?
It's been but you look at it, there's been accumulation, like Barry has said. Look at 2010. Put your thing right over 2010, the height there, right? Right around there. That he said, that was basically builders stop. This is what we're running into the supply problem because the last 13 years, look at that line. That's exactly why we've got tight inventory.
Yeah.
And I think the builders just got real skittish after the recession, and I think they've had building PTSD for the last 13 years. And, unfortunately, if you look at the charts that Barry pulls up Barry does a pretty extensive breakdown, like in a 30, 45 minute, he has these seminars, and he says the millennial, the millennial group is bigger than the baby boomers. He goes, and the problem is they have put off they were not getting married at 20, 21, 22 and having kids. They put it off till like they're 31, 32, 33, 34, 35. Now, they've got one or two or three kids now, and that's the problem that they're running into. And that this supply has been, accumulation of 13 years of really not building at what they should be building at.
Yep, that's and then you add to that, our current rate lock situation and this is
Yeah.
where we are. Check this out though. Closings above list price are now 16%. They're going up. Um, and here's Keenan, who's one of those age group, the millennials, says, I can vouch for that. He waited.
Yeah.
He waited. So it's going up 16%, but it's not happening everywhere. The largest is in the 300, 400,000 range and 4 to 500,000. But the amounts are pretty tiny when it shows over list. They're averaging like $6,000 and less. So I'm not seeing what I would call a, rampant bidding wars. I'm starting to see though some pricing showing up that doesn't make sense. That there's some agents out there and sellers that are in some areas a little more optimistic than they should be, I guess is the polite way to put it. And I've got a video coming out, Pat, on Sunday night on for sale by owners. And I'm taking a kind of a non-biased view that says, here's how it can work for you. If you want to do this, here's what you have to do. Here's ways that you can save money. Here's some services you can lose. And then I say, now here's what you should watch out for. And if you're going to do for sale by owner, here's how to do it right. And because most for sale by owners give up after 17 days. And I know one of our sellers on here last week who said he's a for sale by owner. I don't see it on the market anymore. So I don't think it sold. I mean, I could be wrong, but I think his phone was ringing off the hook from real estate agents. So, but tell me what's going on with rates this week, and then I want to talk about the internet sensation of the what they're calling the Biden rule for robbing the rich and giving to the poor. So,
yeah. I mean, this is pulling back. I mean, this is the last. Rates have obviously screwed up a little bit here. This is rates now. We saw it hit a bottom April 6th, and obviously we saw a surge here this last from April 7th to about here. We went from 330 to obviously a top. We topped out at 363. You see these lines right here?
Yeah.
This is the 50-day moving average. Purple one is a 100-day moving average, and the blue one, this is a 200-day moving average. And you can see how we're butting up against, all these moving averages are creating this ceiling, obviously, on rates, which is good. I mean, we saw a little back off today. I mean, the 5.5 coupon was up 3 basis points. The Treasury was up 3, but it seems like we're just kind of waiting for next week's news on the PCE. The PCE is coming out next Friday, and we're starting to see Barry has basically said that it might be where we get a year-over-year comparison. You look at the core numbers. I mean, he said you look at the core numbers and you strip out the core numbers. And he was talking about the fact that if we get this, and he was saying in his dialogue, he goes, if we get a 0.3 reading for both, once again, you can see the headline inflation drop from 5 to 4.5% or even 4.4, while the core could remain flat or potentially decrease to 4.5%. So, he's basically saying, the Fed's focused on the core inflation and that they feel that they can control that. But he said, as long as the core PCE doesn't increase and the headline drops, we might see a good market reaction. And based on, the way the market's obviously been, reacting, you're starting to see this, this is actually price. Let me just flip this back really to rates. But you're seeing, the rates getting a little tired here at 3.6, 3.3, 3.63. So, it looks like as though we get some good positive numbers next week that we're going to see rates soften up a little bit more.
I was reading too that a lot of the earnings are coming out next week. It could be a wild week in the stock market.
Yeah. So I mean, we're starting to, we've seen rates tip up a bit, eighth quarter. It just depends. This last week, week and a half, but the way the chart's looking, it's getting tired here. that we see a dip. Here's the next floor at 3.43. I think that's the 50-day moving average. So all these little lines create these little ceilings and floors in between. Because you can see right here, once we broke this one, this was a 100-day moving average. How they fell through. You break it. There's how this line keeps this floor, and then it breaks through, and then you got other resistance levels. So that's kind of what you watch in a short-term level. Within a 30-day moving, 30-day time frame.
Yeah, gotcha.
So, but overall, I mean, Barry's still on the bandwagon that the Feds are still way behind on their information, and I'm sticking with Barry because he's
There's
been
so
pretty.
much confusion out there. I mean, you saw, where, like I said the other day, that Janet Yellen was saying, these troubles in banks is actually kind of doing the Fed's job for them. And I thought, where'd that logic come from? But they're not all singing from the same hymn book. So,
No,
we'll see what happens. But let's talk about, because and we had a question from one of our subscribers about, because the headlines say things like Biden is taking money from credit-worthy buyers and giving it to the poor. And the first thing I'm thinking, I'm going to get political here for a moment, is that there's no way that Biden sat there and said, I'm going to call Fannie Mae. I was crunching some numbers this morning on my desk, and I've got a better idea, to show you. I'm not kidding, Jack. And he has nothing to do with this. It's coming from his administration. Now, Trump probably would have made a phone call like that,
yeah.
right? So he said, I did some numbers. My numbers are the best. Anybody that see my numbers know that they're the best. So, but
Good impersonation.
I doubt that would happen either. I mean, just ask him. Nobody does math like me. So tell me what this thing's all about.
It's all China.
Yeah.
China.
What else is the other one? I don't know. I'll do my Clinton later. So tell me what's going on, because for some reason it just made headlines the past couple days, and we touched on this about 30 days ago.
No, actually about 3 or 4 months ago.
Yeah. So what happened? What's this all about?
Well, basically May 1st. They said May 1st. They're gonna. They're the long and short of it is that they are kind of taking from good credit score people. They're charging them obviously more, and they're loosening up on the lower credit scores. Here, let me. I'll throw this chart up. If you can throw my chart, throw my screen up again. Is that the one that no? Why is it?
So now I tried to look this up before the show, Pat.
Yeah.
And I pulled up all the rates and everything there, and this made my eyes bleed.
Oh yeah.
This is what you have to look at. This is the Purchase Money Loans LLPA by credit score and loan to value ratio. This underscores why we say, Pat, what's my rate?
Yeah. Yeah.
Right?
Whether you're putting 10% down, 20% down, 25% down your credit score. I mean, it does change all those little percentages basically means that it just added cost to your loan. People say, I want to get, 6.5%. If you got an 800 FICO score, it might cost you only, let's say $1,000. But if you got a 680 and you want 6.5%, it might be an extra, let's say 2 points. It might be $4,000 more added onto your cost. You can still get 6.5, but it's an added cost. And basically, they are. I don't know why my screen is not popping up. It's right there. I don't know why. But bottom line is, they are changing the fee structure. But this has been implemented. This is just for conventional loans. It's not for FHA or VA. It's just conventional loans. Basically, it could add anywhere from, $2,000 up to $4,000 or $5,000, $6,000, depending on your loan amount. If your loan amount is $500,000, it might add $6,000 or $7,000 to your loan cost. And there has been an uproar in the industry. What really is kind of frustrating is back when Dodd-Frank came out back in 08, 9, 10, there's in no uncertain terms where they kind of blame it all the mortgage brokers and mortgage lenders for their outright program. The programs were they were crappy. Don't get me wrong, they were just terrible. But a lot of it, then they changed our compensation, and a lot of it, the undertow was these mortgage lenders were charging way too much money. Which, yeah, and honestly, there were it was getting outrageous. I mean, people were charging 3 or 4 points, and not it was out of control. I will say that. But to say just put the blame on just the mortgage lenders for the whole fall in 08, 09 was ridiculous. But that's
Well,
what
what
Dodd Frank.
I was reading that you come in with a credit score that's below 640, that you're not going to get charged your instead of your interest rate going up, it's going to be capped. In other words, you used to get punished if you had a low credit score, so now they have a cap on that punishment. Am I saying that right?
Um,
That's what I read this morning. So it just where
yeah,
there's,
yeah.
you can get a good interest rate if you're on the higher tier, but your fee is going to be up, and that fee is going to help them to be able to not ding you on the other end. But in all of the noise that's out there, most of the examples are like $40 a month. The savings that the people that are having a hard time qualifying are going to get is $40. So that's
Mhm.
that's not going to get you a house. If you're
No.
buying a house and you're down to the last 20 or $40, that's you know,
Well, all these, TJs, right? I mean, they are kind of robbing from Peter to pay Paul. The government's twisting this. And I'm talking about. I'm not talking politics. I'm talking just whenever we talk, we start to people think we're talking politics, but I want to talk. We try to talk policy. What policy is good or bad? And like you said,
it
when I
doesn't
talk
make
about the
any
Fed,
sense. It's not going to accomplish anything.
no, this stuff is not. I mean, this is not going to increase somebody who's got a 640. I mean, people who are 630, 640 range. That's the type of range. It's you go FHA because your pricing's better. FHA has made some good implementations as far as reducing the mortgage, the monthly mortgage insurance premium from 0.85 to down to 0.55. I wish they would knock out a little bit more of the upfront mortgage insurance premium, which is 1.75. That would help, obviously, there. But this once again, this is just I just don't trust these people, the feds. Um, Honestly, I mean, they're trying to paint this like we're trying to help, lower credit scores with home ownership. I don't think people that are 640, 650, you still need a down payment. You know, um, you still need to qualify, with a lot of these down payment assistance programs, you need a minimum credit score of 640 to 660. Even then, it's a little bit tougher. I don't think this is going to be this, they're trying to paint this like, oh, we're helping, lower score credit people get homes.
It's
I,
not going to happen.
this is basically just a money. Bottom line is, this is just a money grab from the Federal Housing FHFA. I mean, the Fannie Mae and Freddie Mac. If you look at their balance sheet, they've got billions. This has been basically feeding the Treasury money, and they've got billions on their balance sheet. If you look at it, and they're still in. Why have they been in conservatorship since what 2008, 9, 10? Will they ever get out? I doubt if they're ever going to let them, because it's basically a cash cow for them
Yeah.
for the most part. I mean, and they could say, well, we're using this money just in case there's foreclosures. Well, look at the foreclosure rate is minimal right now. It's ridiculous. So this is just bottom line is from the mortgage industry is not happy about this, because I mean, obviously the pricing it's across the board, whether you're going to lender A or lender B, it's across the board. But this is just a cash grab for the government, and they're trying to paint it like we're trying to help the homeowner who's really struggling and trying to get a house. This is not something that's going to help them at all. I'm
But it
I'm
also
sorry.
shows you too that, all of a sudden it just exploded on the internet that this program's coming up
Well,
May 1st. And I mean,
it's been,
they're a little late to the party here. This has been out forever.
yeah, this just goes to show you how we always talk about the fact that everybody's a day late and a dollar short on news. Because this is stuff that was happening. Lenders were starting to price this in 2, 3 months ago, because it's always the delivery date on May 1st. So if you close a loan April 1st, they might not deliver that loan to Fannie Mae, Freddie Mac till May 15th. Sometimes they
Yeah.
keep it on their books, or they ship it out. 4, 5, 6 months, or 4, 5, 6 weeks later. So it's the delivery date. So all these we talked about this 2 or 3 months ago about the LL, the loan level pricing adjustments, happening. So it once again just goes to show you that the news is now hitting the wire, but this stuff was 3 months ago.
Yeah. Well, but house prices the same way. A lot of the news that you're reading right now are saying January and February. They're talking about that data and
Yeah,
how much slower January was and stuff. So it's like I was explaining to one of our buyers, day before yesterday. I said your average buyer still thinks um, that it's bad out there.
yeah,
It's November, December, so therefore you don't deserve your asking price. The average seller thinks it's kind of slow too, but then there's some that think, oh, I've heard that it's really taken off, and everybody forgot where balance was. Now, how long they'll stay here, I have no idea.
yeah,
It's TG. Why not just lower those fees across the board, regardless of credit score? I
yeah,
agree.
yeah.
Charging more higher credit scores like punishing none of it makes sense to me.
None of it
None of
makes
it.
sense. None of it. And once again, typical government. We're here to help, and which is total BS. And they should just, And the thing of it is, to me, this is discriminatory. It's basically discriminatory lending, is what it is.
Well, and then why does it have to look this complicated?
Yeah, yeah,
I mean, they wouldn't even need this if they would do what TG just said, right? You wouldn't
yeah.
have to do that. And
Once
um,
again, they're complicating stuff because it's basically a money. Like I said, I hate to get on my soapbox, but this is just once again, the money grab. And there's so many things that the government comes in and tries to help, and they've screwed things up more in the loan business. Yeah, I will agree. Dodd Frank has from a compliance standpoint, from the regulatory standpoint, the qualified mortgages, it has settled. It's put good loans together. Now, we need there's a lot of compliance, which is good, but there's other parts of it, this pricing stuff, as far as once again, it's just a money grab, and it's just
yeah, yeah.
frustrating.
Got a comment in Terry here. Is your son's Best Buy store safe from closing? Yes, it's not on the list. They are doing some consolidating, but theirs is a pretty profitable store there, and so they're not making any cuts. And he did find out that he gets to go to the Consumer Electronics Show in San Diego. So that's a good sign. That means they're not closing anytime soon. Hello, Jason. Get rid of that cold, wet, chilly weather before I get there. So we need. I told my brother, you gotta knock that stuff off. So um, we're going to have we're trying to put a show together next week where we're going to have a lot of guests on, people from California and all over the place to celebrate our 1 million views here. Sam says I need him to sell me a camera. He'd be happy to do that, Sam. And but we're gonna celebrate next week. We're gonna try and have a little surprise guest on here that we're working on. We're still trying to get Barry on the show. That's hard to do. We're not big enough yet, but we're gonna keep trying to do it. But then I wanted to show this because you brought it up, Pat. These are pre-foreclosures.
Yeah.
We're down to notice of trustee sales 306, actual trustee sales 28.
Wow. That's
uh,
crazy.
yeah, that's the crashers. That this chart is not doing what you said it was going to do. What's that movie, Princess Bride? I don't think that word means what you think it means.
Exactly. Exactly.
Oh,
No.
Stephanie says this is your 1 millionth subscriber. I wish I don't have 1 million subscribers yet. I have 1 million views. I have 5,150 subscribers or something like that. So, what's this here? Gonna You're gonna get Scott Walters? I might. Everybody knows that guy, so it's pretty funny. So, but we'll see what happens
Hey,
next week. We're gonna try and have a little fun.
I want to throw this out as a PSA, public service announcement, and I just got this email today, and I talked to you about this before we came on. Got this from one of the loan officers at our company. I'm reading it verbatim. She said, "I just heard from one of my clients that they received a fake email from me and Title, giving them fraudulent wire instructions, and they were moments away from wiring the funds until this was uncovered. I would strongly encourage everyone to remind their clients of wire fraud, as they may not be reading all the alerts sent out to them in the disclosure packages. And your emails if you're looking to buy or sell, whatever you're looking, any type of real estate transaction, and for that fact, any type of wire, um, call the title company directly, and do not wire until you talk to that person and you verify every detail in the wire instructions to the period. Um, this phishing stuff is happening. It's scary, but do not wire 20, 10,000, 5,000, 100,000, 150,000 until you call and you talk to Mary Smith at American Title and you talk to her specifically and say, here, I got the wire instructions. Let me go over them with you. Let me repeat. I'll repeat them to you and you make sure, confirm that they're correct, because this stuff is really scary.
Yeah, and it's pretty common too, because those emails look so official. I
Yeah.
mean, they what they do is they go to the website and they copy their homepage from the title company. They're also following the transaction, because a lot of real estate agents use Gmail. So they've figured out a way to hack into your account, and they're following the transaction up to the day before they know you're going to wire your money. So, I mean, they're not just sending this out at any random time. They've been watching it. So they're watching the transaction, and then they go, okay, I'm going to send them the wire instructions today, and you are in trouble. So if you're going to get one that's going to look exactly from the title company, it's going to have your title agent's photo on it, until you go up and look in the browser and you can see, no, that's not from, like, you
Yeah.
know,
I
lawyer's
mean, that,
title. It's not. And everything will look legitimate except for the toolbar. So then, rather than trying to be some kind of a white hat and figure something out, just give title a call. Hey,
yeah.
let's go over these wire instructions, if that's
And
okay. So
I stress this, and I will keep stressing it, because it's, you've got to talk to somebody. Just don't leave them a voicemail and don't do anything until you talk to that title person. You verify the exact information, because it's too prevalent, way too prevalent.
I've heard
So
horror stories, especially people like from China that are buying, just a couple of years ago, got buying multi-million-dollar homes in California for cash, and they
yeah,
wired all the cash. Once it's gone, it's gone. There's not an agency out there that can go scoop it and get it back for you. You have clicked it in to somebody else's
I've heard of
account.
stories that they can somehow, but it's almost like it never. I've heard a few stories, I think, where they have recovered it. I don't know how they do it. Um, but it's a scary proposition. So I
The
can't
other
stress that
thing,
enough.
yeah, the other topic I want to look at, I'm doing some reading on it now, and that is squatters. It's a big problem throughout the country, and each state has different rules. But if you have a house that's vacant, people are moving in and changing the locks, and you can't just go kick them out. They
No,
you and the police can't do anything about it. So there's a process, and each state has a different process, but it can take months, and then your house is usually destroyed. I mean, you can't just show up with your brother-in-law and say, "All right, we're kicking you out of here." It doesn't happen. Um, Stephanie says, "I wonder how they breach your Gmail account. It must happen." That's what's called phishing. So they might send you something that says, that looks like a legitimate email, and you click on that link, and they're in. So it's, hey, check this, Rick. I got pictures of you on vacation, or I sent you some photos, and there's a million ways to do it. In fact, I have a friend that in my class, and she works for the federal government in cybersecurity, and she told me how Hillary Clinton's emails got hacked.
huh.
John Podesta's assistant clicked on a phishing email.
Huh.
So she opened it. And once that was open, we're in. And that's
Yeah,
what they're doing. So
yeah,
if you've got, you may have your own email, but you got other people that are managing it. They better be up to speed on what's going on. She said that was just one little mouse click and boom,
yeah.
they're
It's
there, down goes Frazier. So,
scary stuff.
but
So
yeah, I'm glad you brought that up, because wiring is, that's dangerous stuff. And
yeah,
if
I hope
you
anybody
get
watching
caught
this.
up in all this stuff in the transaction, you can't wait to get it done, and you overlook that one thing, you've ruined your.
Well, I just want to pass it on, because anybody that's watching this, they can, if they got a friend buying a house or doing whatever, if they could pass this information along, just do a double check and tell them, hey, be sure you know what you're doing,
Yeah.
because it's not a that would be a crappy feeling having $50 to $100,000 wired, and you're like, oh, I never got that wire.
Well, title
You know,
puts the disclaimers in each email, but who takes
yeah,
the
but
time to read all that, right? You
yeah,
just
who's? I mean, that's what I'm saying. I mean, you get disclaimers, but they're usually the disclaimers are at the bottom of the email. Be aware of wire fraud, but it definitely happens. So
Vanilla Ice, does adverse possession take 2 years here in Arizona? That's what I don't know. I've got to look it up. It just, I don't know. It just gets under my skin that somebody can walk into a house, change the locks, and then pretend it's theirs.
sounds
You
like
know?
my ex-girlfriend.
Yeah, yeah. Well, that happens to you all the time. So you're locked out for different reasons, though, Pat. So we won't get into it on the show here. But do you guys foresee anything drastically changing during these current conditions? There's always dark clouds circling, so I don't know where everybody's watching banking. If the credit lines start freezing, then yeah, we could have some problem, but we could muddle through it. The Fed may be tightening too tight and causes some other problems. They're afraid to loosen up, but I really don't know what's going to happen. We're just going to watch it. But right now, the numbers that we're seeing, it doesn't seem to be harming what's going on in the housing market. So
Well,
that's why we're here, and we will let you know if anything is showing its ugly head. But
you know,
till then, Pat, I'm going to go ahead and wish everybody a great Friday and a fabulous weekend, and we will see you next week.
all right, buddy. Take
Take
care.
care.
Bye.